quick Virgin Galactic follow-up video. Just had this comment come in. Many of you are not understanding what is happening with the split and how it affects you and how to play it. This is very important. Danny Rothschild just gave me a super chat and said this. Price is irrelevant. Market cap you should focus on. He's absolutely right, because we're getting some comments here that are actually confusing people, and I need to clarify. I've just had another one come in. Be very, very careful. Let me bring this up to you here. Let me just find it here. Here it is. Radiant Smile, the same person who spoke about the reverse split in the previous video, and that he thinks that, the shorts are going to get wrecked. He says here, best to buy now at the current price, 67 cents. Well, yeah, it's better than $10. I should buy it now, shouldn't I? Well, hang on. Or buy it at $10. LOL. He thinks it's funny. Sounds obvious, right? Don't buy it at 10, buy it at 67 cents. Obviously not. That's not how it works. And some people are making that judgment and that mistake. Radiant Smile is a good investor. If he's thinking that, somebody else thinking that. So please don't have a go at Radiant Smile or think you're smarter than him. Many people will be thinking exactly the same. The purpose of this channel is to educate and entertain and support people. So let's be absolutely clear. Is it best to buy it now for 67 cents or pay $10? It's exactly the same. Exactly the same. You've not bought 10 individual slices of bread. You've bought one loaf of bread. The same amount of bread for the same amount of money. Exactly the same. Right. But is it better to buy it now, or is it better to wait for the split? Well, obviously the price is going down because people are getting out of the stock because they expect it to go down. That's why the stock is going down, because people are selling it because they expect it to go lower. So, on that analogy, later on tonight, first thing Monday morning, we anticipate once the stock has split, and now you have 10 slices for one loaf, it will go down because it will be shorted again. So most people believe, I believe the same, I believe if you're going to buy it, you want to buy it after the split because it's likely to go down. However, because everyone's selling it now, because it's going to go down, or they anticipate it going down, then everyone's anticipating it going up afterwards. Obviously, play chess, don't play checkers, don't be reactive, be proactive. So if you are assuming it's going to go down, it is, people are selling it, then you assume it's going to go up next. You don't want to be buying it after it's gone up, do you? So it's not as straightforward as that thinking, is it the right time to buy it now? Is it the right time to buy it then? What's important is, as our other guest mentioned, it's all about the market cap. You have got to decide, are you trading it or are you owning it? Because if you're owning it as an investor, does it matter whether it's 67 cents now, or 65 or 80, whatever? It's massively undervalued by about 10 times at the moment. So it's undervalued anyway. It doesn't matter to you if you're a long-term investor and you want to see it go to $100 like I do, but just bear that in mind. And finally, on the point of market cap, let's understand what that means. If we scroll down here and look at the market cap, the value now of the outstanding shares only, the value of the outstanding shares is 276 million. That is the market cap of the business. That's what the value of the business is for the outstanding shares. Important to say the whole sentence, the outstanding shares. That's the value of the company. You buy the whole thing, all the shares, for 276 million. So as an investor, I don't buy share prices, I buy the business. That is what I'm looking at, not the share price. Does 276 million sound undervalued when you know what they earn, when you know what their customers are, when you understand all of the growth and all the rest of it, is $276 million undervalued for this company, and is it likely to go up? If the answer is yes, you believe it's undervalued and will be worth more in the future, you buy it. If you cannot buy a business that you can comfortably own and hold for 10 years, you have no business buying it. It's very, very simple. You might still want to trade it. You might still want to take profits. You might still want to post losses for tax purposes. But if you look at that market cap and you believe it's too expensive for what it is worth today or where it'll be worth in the future, you have no business buying it today at all. If you do, and you can own it for 10 years, then buy it. If you then decide to trade it, that's fine. I hope that makes sense. Join SENSEI on Sunday as he does a full technical chart for you above my head. Also, I've just put another video out about the split, what it means to the shorters. Be very, very careful. And most importantly of all, he's back. The Wolf of Dubai. The man who constantly tries and sells training programs where you can be guaranteed to 10x your money if you follow his trades. It's the worst advice. He's back on YouTube. Now he's telling everyone to buy again for the wrong reasons. He doesn't understand what the hell he's talking about. He's wearing his space suit again. He's like Roaring Kitty, but a little bit more normal, if there is such a thing, but pretends he's a spaceman. Always looking down at the camera. His camera's on the desk. I don't get it. Anyway, he's back selling his training programs. Be careful. He doesn't have a clue what he's talking about, but I wish him the best. He seems a nice bloke. I just wouldn't take any advice from him. Click above my head, down below in the description. Over here, I'll post the Sunday show and the playlist for Virgin Galactic, and you can go and watch that previous video I just recorded about the reverse split. Until then, take care of yourselves and each other.